Our system recognizes about 16 different types of patterns, and they're listed here, as well as, of course, listed under the types right here. You can scroll. What's also important is to realize that some patterns are inherently bullish and some patterns are typically bearish. Now, a pattern can break out either way, right? An ascending triangle, for example, is typically a bullish pattern, because even psychologically, you can see what's happening here is that the buyers are gradually stepping up and buying it higher and higher, while the sellers, are offloading or trimming their positions at a certain resistance level. But it's a bullish pattern that it has an expectation of breaking upwards or bullishly above the resistance level and continuing in that direction. Whereas the opposite, it could very well break downward. Okay, and traders who just trade breakouts typically will then wait for the breakout, right? They won't necessarily anticipate. So like when we're trading this emerging pattern, we're not trading with the expectations that it's going to break up to the bullish side and that's why I'm buying it. No, in emerging pattern, I'm buying it because I expect the price to go to that resistance, and that's where I would exit. I wouldn't wait for a breakout, right? So we're not anticipating a breakout here, even though typically ascending triangle is a bullish breakout or resolves in the bullish breakout. But that's not why we were getting involved with it in an emerging stage, because it could break out to the downside as well. And so it's the other rule is, of course, that you want to continue, as I always emphasize, and I will continue to do so, is trade with the trend. So like here, nulls, if we click on this image, we can very quickly assess the trend, and you can see here that it's our trend rating system ranks it as up on the short term, up on the medium term, and down in the long term. I would say the medium term is the most critical one, which indicates that it is trending up. So getting involved with this triangle and buying the emerging triangle would be trading with the trend, which is what we want. So that's always still a good check to make. Again, certain patterns typically will have bearish breakouts. If a descending triangle like we have here, if it has a bullish breakout, that's not something we would normally trade unless it's in line with the trend. But descending triangles typically have, here we go, descending triangles typically resolve to the downside, as you can see down here. Let me highlight that, right? No matter where they form, whether it's in the uptrend or a downtrend, they typically resolve in a down and break down, okay? Whereas certain patterns like ascending triangle are typically bullish, right? And then in other cases, for a falling wedge as well, typically bullish, double bottom, bullish, inverse head and shoulders, bullish, right? Others, like channel up and channel down, notice that we don't have it in this cheat sheet because those can really break out in either direction. Right? And you can trade it in either direction as long as it's in line with the trend. Here are some of the success rates that we also highlighted last time to give you some guidance. What patterns should you bother with? Inverse head and shoulders, that's a bullish pattern. We talked about that as really being a very rare pattern. So if you find it, fantastic, but you won't find many of them. I think today, for example, if we look at that pattern, I don't think we'll find any results. Inverse head and shoulders, nothing on a daily time interval, 4 hour, 1 hour, one on the 15-minute interval. Okay, here we go. So there is one here, and that's an inverse head and shoulders. pattern that you could trade, and it's an emerging one. It's not a breakout yet, and then profit potential is very small right now, so it's probably not something we would trade at this point. So it is a rare pattern, but it's certainly worthwhile doing when it does occur. Doubled bottom as well, great one. We talked about horizontal resistance emerging, horizontal resistance breakout, channel down, solid. Head and shoulders, it's got a good success rate, but that's a bearish pattern, right? So if you were to be, if you were comfortable with shorting, then that would be your signal. Also support emerging or support breakout, obviously those are bearish patterns, so I'm not going to highlight those here. Double top, also a bearish pattern. Channel up could be both bearish and bullish. Triple bottom could be bullish. And then I really like falling wedge and ascending triangle as well. And then you get into some patterns that historically have had poor or less attractive risk reward or success rates, and I don't typically traffic in those. Great. So how do we look for these? Obviously, we've already explored one way of doing that, which is through the pattern section. Right here, you can find the pattern that you like. Let's try channel up. And if you just want breakouts, we can just do breakouts. Right now, we're on a 15-minute one. So let's go to a daily. Or channel down, right? Breakouts. You could say you just want those that give you buying opportunities, not selling opportunities, or you can just say we just want buying opportunities and just breakouts, right? You can kind of combine the filter the way your preferences are. Now there are other types here of patterns that fall into a Fibonacci patterns. So these are the subtypes of Fibonacci patterns, A, B, C, D. Some people swear by them. We don't have historical performance on these. I don't trade them mostly. Really more advanced traders could find some opportunities here. Really, some people, like I said, really swear by the ABC pattern, for example. So over time, maybe you can leverage that as well. We have some consecutive candles patterns. Those are, again, patterns or really situations where a price has multiple consecutive days or periods of either down or up closes. And the idea is that there could be a bounce or a sort of counter trend move following these consecutive down days or consecutive up days, a bit of a reversal to the mean, especially if we're talking about situations where we're reaching a support level. For example, here, let's look at this situation here. Now, mind you, your trend is down and down. In the long term, it's up. So this could be a bit risky, but what I like about this, for example, is that not only have we had multiple down days, but we're also approaching the 200-day moving average, which is typically acts as a solid dynamic support level. So this consecutive candles could be of interest or could be leveraged. And then the last one on the list that we have are big movements. And that's somewhat similar to the other one in that basically it warns you or alerts you that there's been a big movement and there could be some kind of reversal. I would sort of combine this with an overbought or oversold RSI.